Tom Lee has said some things that are absolutely insane and really against the view that he has had over the last couple of weeks in an interview that he did today. And again, though, if you guys have been paying attention on this channel here, this would come as no surprise to you guys. There is still a lot of uncertainty in this market. And what makes the most sense right now is to hold off, take a step back, sit on the sidelines, and wait for these situations to continuously develop. So we're going to be going over the statements that Tom Lee made, the exact reasons why he's making these statements here, because again, I don't want to just cover this surface level info for you guys and have you guys watch a video and then all of a sudden you leave and think to yourself, well, I didn't really get anything out of that. So what we're going to be doing here, again, going very in depth to everything that's going on in this market. And Tom Lee is actually bullish on one specific asset class as a whole here. And we're going to go over the exact reasons why that is as well. So guys, before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, one of my favorite phrases here, guys, pay attention or pay a premium. We've been pretty spot on with a lot of these market movements over the last couple of months here. Make sure you guys are subscribed and turn on notifications so you never miss another video like this. But without further ado, let's roll the clip and then get right into it.
When we were talking about Bitcoin sort of stuck under 85,000 with gold going up every day, and it was either you or Pump that said Bitcoin usually follows a couple of months later, but has a much bigger move.
That was probably Pump.
Probably, yeah. He's pretty bullish.
Yes.
Have you noticed anything similar to that? I mean, that's a pretty big move. And you know, in the past, gold's been leaving in the past near term, 2 months, 3 months, whatever. This year, maybe. We have seen gold leave Bitcoin in the dust and go to new highs. Looks like it'll do 4,000 easily, right? Do you think Bitcoin eventually catches some of the same money, the same bid?
Yeah, I think Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
As for the equity markets, you think stocks are attractive, but uncertainty is still the name of the game, and it's going to persist. You think the high in the VIX, what did you say that was on April 7th, that holds?
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I don't know if we're past maximum pain. I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
So I don't know if I really think it's going to be hard to match. I could get a lot more. People were pretty fearful. Yeah. So you don't think this is going to be the absolute washout that some people are thinking, something similar to past breaks that were really significant. So let me ask you this then, just specifically, does the S&P have a closing bear market low from here? What are we down? 14% now, something like that.
Yeah, I mean, 4,800 was the low we made a couple weeks ago.
Yeah,
and I think that there's a chance we could be drifting dangerously close to that again in the next couple of weeks.
So there you have it, guys. As these trade talks and the uncertainty surrounding global trade continues, again, we are going to see some short-term volatility and some downward action in markets. I think a lot of people were expecting these trade deals to get signed right away, but when you look in history and the actual reality of how long it actually takes to finalize every single element of a lot of these trade deals, it could take a year to a year and a half on average in order to get a lot of these deals finalized, which I don't think a lot of people knew or really expected, and was one of the main reasons why I've been kind of having that cautious view on this market. And again, I've said this many times in the past, that it is better to be late than wrong in this environment, because we could be in for some more downside. Now, not in everything though. We are seeing certain pockets of the market have some pretty bullish action, and that's exactly what Tom Lee was showing us there. If we come over here and take a look at Bitcoin today, Bitcoin is currently sitting up around 3% there, and as you guys have heard Tom Lee say a couple of times in the past, he has a relatively bullish view on Bitcoin going into the end of the year at about 150,000. Now, just technically on this chart, remember, we've talked a lot about this prior all-time high zone here a lot, specifically that 90,700 area on Bitcoin where we broke below, we got our retest, and we really haven't done much of anything since that initial break to the downside. Now, moving forward here, again, we have a very, very strong breakout here today. If we are able to get back into the zone, which is right between like 90,700 and 94,000, you got to be very careful of one of these break and retest moves, rejecting back to the downside again. But if Bitcoin can clear this 94,000 area and really 95,000, breaking above that strategic crypto reserve high, then we get that retest of that zone there, Bitcoin could be in for some significant movement. And that also lines up with what we are seeing on the global M2 money supply liquidity chart that a lot of people have been bringing up over the last couple of weeks here. And you guys can see Bitcoin, again, is going to track this chart here, but it does lag by a couple of months. And we are right at that point now where we would start to expect to see Bitcoin moving back to the upside. Now, we also have to think about the supply and demand element of the market in general. If there's not an overwhelming amount of demand for assets, specifically US assets, well, it's going to be very difficult for them to trend to the upside. And as we can see with this chart right here, foreign official demand for US stocks is absolutely falling through the floor due to something and some actions being taken called repatriation. And we can see this reflected in many, many different elements of the market. We can see the dollar with significant weakness versus other currencies, meaning that we're seeing the selling of dollars and converting it back into a lot of these other different assets there. Again, you can see that reflected in USD JPY here with the yen strengthening versus the dollar. You can see it in a lot of these other foreign markets as well, Europe, Mexico, China, all outperforming US markets this year due to the significant levels of uncertainty that we see. Now, what a lot of people are also hinting at is this potential growth narrative that could start to come over the next couple of months here. And one of the things that is being floated around a lot is tax cuts. Now, the problem with talking about tax cuts right now is that obviously you are going to need to balance that out with revenues elsewhere. You're going to either need to raise taxes in different sectors or elements of the economy here, or you're going to need to generate significant amounts of revenue from, let's say, tariffs. The problem with what's happening right now is that the Trump administration is now playing both sides of the game here, saying on one side we could generate a bunch of revenue with these tariffs and we're fine with keeping them on, but also hinting at the fact that they are very open to negotiation. Now, this is a very, very big problem for business owners and anybody that needs to get inventory from different parts of the world. And what a lot of people are doing, you can look at Twitter, you can look at it anecdotally, and I know personally people that are running some pretty significant businesses that I know are not buying new inventory because think about it like this. If there is a significant tariff on the goods that you are going to be importing right now, but there is potential for trade deals to come in the future and you still have existing inventory in the United States, well, it does not make any logical sense for you as the business owner to go out and buy more inventory and import it because your margins are just going to compress. So right now it is very, very difficult for a lot of these business owners in many different sectors to figure out what's going to happen next in the economy and then relate it back to their business. Now, we also have a couple of other data points on this as well. And when we come over here and take a look at this, we can see that US imports from China are down about 64% right now. So people are not buying this new inventory here. And these numbers that you're seeing with $650 billion of revenue generated from tariffs solely hinge on that assumption that import levels are going to stay the same, which we are not currently seeing here. So this playing both sides of the coin and both sides of the fence here can be good for these negotiations, but it is really handcuffing business owners at this current time. Now, again, speaking about that uncertainty just from the business activity perspective, we also have a lot of uncertainty as it relates to markets, mainly because of statements like this here. Preemptive cuts in interest rates are being called for by many, with energy costs way down, food prices, including Biden's eggs disaster, which again is true. Energy costs are moving down. Food prices are moving down, which is definitely a good thing to see. And again, also kind of feeds into the fact that my assumption is that tariffs are not going to lead to a long run steady increase to inflation, you could see a little blip to the upside, but as demand starts to crater, and again, imports start to move to the downside, you start to see a deflationary effect due to these tariffs here. But this situation with these preemptive interest rate cuts are spooking the market. If you guys understand or were around the market in 2018 when Trump and Powell had their initial kind of back and forth here, Powell did end up caving in that situation. And I think Trump is looking for Jerome Powell to do something very similar here, but a lot of the data in the short term does not necessarily support interest rates coming in May here. We are seeing the start of a growth slowdown. We are seeing unemployment tick to the upside, but again, back to that uncertainty that we're seeing out of this trade and tariff policy, we do not necessarily know what is going to happen for 100% certainty with the cost of goods and services, which is not going to allow the Federal Reserve to act. Now, this has led to a very significant flight to safety trade in the global markets here. Now, in normal times, you would expect to see bond yields, U.S. Treasuries, catch a bid and start moving up with yields moving down as people rotate out of U.S. equities into U.S. bonds for some more safety. But we also know that we are seeing this significant flight out of U.S. markets as a whole, and that is one of the reasons why you are seeing bond yields moving to the upside in this environment and not to the downside. And you have things like gold moving absolutely vertical, Bitcoin starting to move to the upside there too, and foreign markets starting to outperform or continuing to outperform U.S. markets. Now, the problem that a lot of new investors are facing right now is this feeling of either FOMO or rushing. Because again, you've heard people like Tom Lee say that we could have been in for a V-shaped recovery, and now all of a sudden the markets are trading a lot lower there. What I need to get across to everybody, and something that I've been saying a lot in these videos, is one, it's better to be late than wrong, and two, there is no rush in this market environment here to try and make rash decisions and big decisions with your investment portfolio. These situations are going to take a lot of time in order to get resolved. And I would not, again, expect any one tweet to change anything here. Again, it's the damage has already been done. Business owners as a whole, investors as a whole, need more clear guidance from this administration with these new policies in order to make these significant decisions moving forward. And until that happens, this market is going to be filled with relatively high levels of uncertainty. So guys, that's really going to wrap up this video here. Again, if you had any questions on anything we covered in here, make sure you drop them in the comment section down below. It is nice to see Tom Lee getting on the right side of things here and kind of getting off of that perma-bull view here and understanding that these things are going to take a significant period of time in order to play out. So guys, if you like this video, make sure you guys drop a like down below. If you never want to miss another video like this, make sure you guys are subscribed. But until next time, guys, I will see you. Peace.